So we've got moonshots in banks and energy over the last few weeks. The question is, do we want to chase them or do we want to let the market come back to us and pick our spot? And what would that spot be? Hey, this is Arthur Hill, Chief Technical Strategist at TrendInvestorPro.com for Thursday, November 19th. Thanks very much for joining us. So today, as I said, we're going to look at banks, KRE, we're going to look at energy, XES. These things are up like 40 to 50% in a matter of a few weeks. And sure, it's a big move and there are trend-changing events, but volatility has spiked, and usually buying on a volatility spike is not that great of an idea. And we want to wait for volatility to settle down and let it come back to us. And I want to show you what that might look like. Then we're going to turn to an alternative, I think, that looks better actually than banks and energy, an industry group with a secular growth trend, and that would be mobile payments. We'll then turn to delivery services because I'm seeing some pullbacks in a couple of stocks, JB Hunt and CH Robinson. Let's hit the charts. So we're going to start off with the chart for KRE, the regional bank SPDR, and it is a very broad-based ETF, mostly smaller regional banks. If you look at XLF or KBE, the other bank SPDR, it is mostly focused on the larger banks, and then XLF is focused on the largest stocks in the financial sector, whereas KRE is a much broader ETF that is going to cover the group of regional banks as a whole a lot better. And you can see that regional banks were serious laggards. I mean, even after this big surge we had in June, did not get above the falling 200-day moving average. So we had this big move up, then we had a long falling wedge. And meanwhile, the S&P 500 is moving higher. And so this was when value was out of favor. And then all of a sudden you have this gap down and pretty sharp decline, and then it's suddenly reversed and you fill this gap. And then we get the wedge breakout, have a little bit of a pullback, and then we get the big surge. And this is basically a 40+% surge that is in less than 2 months. This is a monster move. Has it changed the trend? Well, yes, because you've gotten above the prior highs that mattered. You're above the 200-day moving average, and then you had a higher low before it. So you got the higher low, the breakout above the 200-day. So this looks like a trend reversal. So if you're an early bird trader, the early bird gets the worm. So here you are, you're the early bird, you've got this bear trap, the filled gap there, and you get the breakout. So I'm in, man, this is it. And of course, the market moves higher. And at this point, I think you want to be a second mouse type of trader. And what does that mean? Well, the early bird gets the worm, but the second mouse is the one that gets the cheese, because the first one is caught in the trap with its neck smashed or whatever. So at this stage, you've had a big run up. Volatility has spiked because you've got this huge move. And this is not when we want to be interested in a stock or an ETF after a big move. Once you start seeing everybody talking about it like they're doing with energy and banks and value now, it's the time to maybe put it on your radar for a ETF stock to watch going forward. But I don't think this is a good idea to be chasing at this stage. And I think it's better to let the market come to you. In basketball terms, it'd be like forcing a three-point shot when there's plenty of time on the clock. And, we're not battling against the clock. When you're trading stocks, you can pick and choose your moments when you want to enter and exit. Well, enter at least. Exit is a little bit more challenging. But I think we have to be a little bit more prudent here. And so let volatility settle down a little bit. So I've got this green zone here, and that's a resistance zone. And then you got this consolidation here, and you got the 200-day there. So this is kind of a support zone to watch. And so maybe a pullback into that area and a little bit of a consolidation, maybe a little flag, a little wedge, and then maybe RSI moves into the 40 to 50, or the 40 area basically. Anything between 30 and 50 is kind of an oversold zone. And so that's the area we want to become interested in KRE. I don't want to become, I don't want to chase it up here because I wouldn't know what to do if I caught it. So I would rather see it pull back. So if we look at the energy, oil and gas, equipment and services, SPDR, we got the same thing going, a 50% move. I mean, it is crazy, making this kind of an advance. And this chart looks exactly like KRE. You've got this big shot, and look at that surge in June, and then the long correction, and you hit a new low for that correction in late October, and then got the surge. So the early birds are on this breakout here, but now, you've moved like 50% in a few weeks, like less than 3 weeks there. And so you're getting extended. And okay, yeah, I like energy. Okay, its trend is reversing, but I'm going to let it come to me and wait for a pullback. It may take a few weeks, it may take several weeks, but put it on your radar, watch it on a regular basis, and let it come to you. I've got this indicator down below here. It is the 125-day full stochastic with a 5-day smoothing. And it tells you where price is relative to its 6-month range. And when it gets above 60, I consider that a trend reversal event. And we haven't done that yet for XES. KRE has done it, but XES hasn't. So I'm less enthused about it. So when I'm looking at a sector or industry group, in the back of my mind, I want to know if it has a secular growth trend behind it. And I don't think energy and banks have that secular growth trend behind them. I mean, okay, yeah, I'm getting on fundamentals, but banks are more like utilities after the financial crisis. They're more like utilities, so they're not going to have big growth prospects. And energy with electronic vehicles, solar power, wind power, all that, energy is not a secular growth theme either. In contrast, mobile payments, I think, is a secular growth theme that is going to carry on as we move more towards digitalization of the economy. So this is iPay, the mobile payments ETF. And these are the kind of stocks and ETFs that I want to have more on my radar than, say, energy and banks. And so if we look at iPay, it hit a new high there. So it's keeping up with the market. Had a pretty sharp dip to its 200-day. Visa and MasterCard led that, and then popped up. And then when I was going through the charts, I ran across Fiserv. And Fiserv has a better looking chart, I think, than energy, especially energy, and even perhaps banks. Because if you look at this, you got this big move to the 200-day, and then you kind of long consolidation, and then they broke above the 200-day and above the June high. Yeah, we've got that long surge during the day and closed near the low, and it's looking a little bit heavy after a big advance because it moved from 92 to 110, so that was like 20%. So it's one I've got on my radar for a pullback, maybe, back into this gap zone or 200-day and then a move higher. But this is one I'd put on my radar ahead of energy and banks. Now I noticed that some of the delivery services biggies, like Federal Express, FedEx, and United Parcel Service were performing pretty good. They've been consolidating. Here's UPS. It's been consolidating since August there with a flat trading range. Kind of looks like the ITB chart where you have this big move up, a consolidation. And yeah, it could pull back. Even if it broke support, I wouldn't turn bearish. And no, I'm not going to call this a head and shoulders, the most overused pattern out there. But we got a clear support zone. And, yeah, maybe this is a rising wedge here. And so we get a break, and that would be negative. But then I would be more interested in, say, the next support zone, which could be in that 130, 135 area, because then you would retrace like 1/2 to, or maybe 38% to a half. So you got this 2 steps forward, and then a 1 step backward would be normal. But that's kind of neither here nor there because right now you're in an uptrend and you're holding support here. And what I'm looking for is more of a theme that's working. Here you can see FedEx. It's a theme that's working, delivery services. You know, got the big move up. I mean, this is a serious moonshot, kind of a pennant consolidation and trying to break out of that pennant. And there you can see RSI in that 40 to 50 zone. And this is another setup that I like to use. You say, well, when do you hop on a strong uptrend? Well, you know, after this gap and this surge and this advance, there weren't any pullbacks. I mean, this is just an amazingly straight up advance. The only two pullbacks that we had since that May-June breakout was you had this little pennant that you would have had to get in right at that breakout. And you can see RSI moves into that 40 to 50 zone. So if you've got an uptrend and RSI moves in that 40 to 50 zone, you've had a pullback. You have a momentum moving back towards the center area. And that happened here in October and November. And so that's why I always watch that 40 to 50 zone. And now we're bouncing off of it. So maybe FedEx is poised for a breakout here. But two that I was noticing are ones that are kind of underperforming. They got hit. And that is JB Hunt first. And you can see that it had a big advance. And let me put on there we go, big advance. And a pullback, big surge, hard decline. But this looks like a corrective move. Looks like we're getting a little bit of a breakout. So you can see after this move, we retraced 38%, came back to the 200-day. So this one is looking promising. And there's RSI. It did dip below 40, but you know, generally that 30 to 50 zone is an oversold zone. You know, if you go below 30, that shows a lot of selling pressure and you might want to be a bit more concerned, but we didn't go below 30 there. And then if we look at CH Robinson, we can see that RSI did dip below 30. So that is a bit of a reason for concern here because that was some strong selling pressure. Long term, the trend is still up. You know, it's a big move. It's a sharp decline, but we're finding some support here in this green zone. And what I'm noticing is we got this little pop, and I'm wondering if we're going to get follow through to this pop. You know, can we get a little break out there to continue higher? And I think that would be bullish. At this point, I want to see follow through. That's a really important concept to remember. You've got the initial thrust up, you've got a consolidation, and if we get follow through, I think that opens the door to. So at trendinvestorpro.com, on Friday, I started noting some signs of excess. Now, we're still bullish overall, but these signs of excess are a bit concerning, and we need to keep a close eye on them. I also put out an article and video on exit strategies, and I compared some different exit strategies: the trend reversal exit, the chandelier exit, the parabolic SAR, and then my favorite was the ATR trailing stop, which I hope to get in the Trend Investor Pro Indicator Edge plugin. But I think this is a really useful stop loss, so that article is available to subscribers. Please visit trendinvestorpro.com if you'd like to know more about my services. Thanks again for tuning in. Have a great day and stay safe out there.